Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's March 15th. This will be our chart lesson for the day, and we had a nice bounce today, and is right off the support. That's a triple test there. So if we can continue to trade higher tomorrow, we might get some momentum here and bounce out of this thing. We might be putting in a bottom. Yesterday, I would have really thought we were going much lower, but this is why you have to be slow on the daily chart. You can't get too far ahead of yourself because the bars take a whole day to form. It's not like you can wait 15 minutes from now and get a better idea. You got to wait a day or a couple of days. So we'll see what tomorrow brings, but this is a nice bounce. You can clearly see that that's the measured move of the original range here. So I'm pretty much ready to call this the range now. And just say we bounced off the support and this is the midline. So that's the way I'm looking at this now. Earlier I was just looking at this as a measured move, but I think this is probably a bigger range, and notice we're still stuck between that midline and the lows here. And these lows might even be down like so. And you can see the last couple of closes were right off that midline. It means we could just move this. This was originally a support line is what I was calling it, this thicker line, but we'll move it down and because you can continue to see the support across there. And if we go way back over here, we had support back here previously. And so, yeah, it looks like we're still in this range. We still haven't put in a new low on this yellow looking channel here. So, but with a triple test, if we bounce higher, it could just mean we're going to continue to be in the range, but we might get into the upper half. But this is a huge reversal here, and this is certainly somewhat positive if we can get some follow through. But we got to get that follow through, so we'll have to see what happens. But let's flip over to the 2,000 tick chart and take a look at. Before I do put the 2,000 tick chart up, I thought I would throw up the 3,000 tick. I opened this morning and have been running them just running it in the background, just kind of keep an eye on it, and it looks pretty good. I mean, what we have is a spiking channel today, and there's a few less bars here, and that's pretty much how it looks on this chart. And you really get your break in pretty much the same place. But you can see there's a few less bars. You'll see it a little clearer when I open the other chart. I think this chart's viable if you want to trade it. And it will slow things down because there's fewer bars. But there's a little bit of a range across here. I think I played it more like that. And you can see here on this chart, we go a little deeper right here, and really you'd still move this up, and you still get a triple test right here to catch that big move up. So you'll see that on the other chart. But anyway, I don't see a whole lot of difference in it. I think you could trade either one if you wanted to. Let's just color these to make it a little easier to see. And even though we have what looks like a range here, in the end, we traded up into this, and you can see the channel still in play, but there's hints that we're probably gonna get a break here soon because we're not getting back up to the higher. And here we couldn't even get back to the midline, and then suddenly we get a little break, and then we rally to a new high, and then it looks like we're kind of selling off somewhat after that. So, but let's flip back over to the 2,000. Okay, and here's our 2,000 tick chart. And you can see it, there's not a lot of difference in them. You can see the spike and channel up and then the sideways stuff, and then we move to a new high. So not a lot of difference in the charts. There's just less bars, and it really kind of slows it down a little bit. So I think it's fine if you want to go to the 3,000 tick chart. Again, I'm still trading this 2,000 tick chart, but I'm getting so many questions on it now that I thought, well, for some of the newer people that might be beneficial to slow it down some, I thought I'd take a look at it and just see what it looks like. And I think you're fine to trade that chart if you want to. Um, if you're not having any troubles trading the 2000 tick, just stick to the 2000 tick. But if you want to slow it down some, give yourself a little more time to read it and make a decision, then you're probably okay going to the 3000 tick chart. So anyway, let's zoom in here. We'll go through the trades and we'll wrap today up. There's not a lot of trades, but there's some really good ones. So lots of several runners and so forth. Today was a pretty good day. So um, yeah, the first trade here, this is slightly before 7 o'clock, like 6:59 or something. I forget what time this bar closed. It opened at 6:58 basically. So I'm not sure. Actually, I'm not sure if that's the time on it's the open or the close time. But anyway, it's right before 7 o'clock. And people always ask me how I pop that up there. If you just point at it, this is built into NT. This is nothing special in our tools or anything. If you just point at the bar and then click on your center mouse, I'm sure there's probably some other way to put it up there if you don't have a center wheel on your mouse, but that's how I do it. I'm sure there's something on this your keyboard that you could use if you don't have a center wheel on your mouse. But it has to be turned on, and I believe it's called, let me look here. I think it's called Data Box or something. Well, I thought it was in here. Let me find it real quick. I'm going to pause it. Okay, it was in your data series. I wasn't looking close enough. But if you see under visual, just go into your data series, as you can see, and then scroll down to visual and look display in data box. You have to have that checked. I believe that's all you need to make it work, other than a mouse with a center wheel. And I'm sure there's some other way to display it but that's the only way I know to do it. You'll have to, the good thing about NT or NinjaTrader is you can go to their video library and you can watch a video on how to do anything. So, and they're very detailed, they're very short and to the point, and it's a great training option if you want to learn a lot more secrets about NT. I'm no expert at it. I don't believe you need all that fancy stuff. There's some things in here I like and some things that we added for our purpose. But for the most part, all you need is a chart that'll put up tick charts and that you can draw good trend lines and support and resistance lines. And all a trend line is a slanted support resistance line. There's no difference. This is no different than a range with the highs and the lows. Simple as that. So, and you can just see prices start at the lows, they go to the high, they come back to the lows, they go to the high, they come back to the lows until they get a break and a new high. And that's basically how it works. So anyway, let's go through the trades. You got this early one here. It's just slightly before 7 o'clock. If you were here, it's a second entry at the key entry point off the EMA in an uptrend. It's as easy. That's as easy as it gets. If you just traded these trades, most days you'll find one or two of them, and they're almost sure things. So the reason I marked this one green is because it was early. It was before 7 o'clock. But if you could mark that blue. So I could have marked it blue just as easy as green. Clear second entry, two legs back to the EMA at the key entry point in an uptrend and it does confirm the trend line. So we run on up. We come back to the trend line again. You get a first entry and then you get a second entry here, but it's an inside bar. But if you wait let me zoom in a little more. If you wait just a few minutes, you get a higher low there, and technically you could still call that a second entry almost, because this all looks like one move down, even though it ticked higher there, but there is a little hidden second entry in there too. So, but this is just basically a higher low at the key entry point, and then we get a break and come back, and you get another bounce right there. And at this point, you could just almost call that a triple test. You test it once, twice, three times. It's the first There, and here's the other thing too. Even though you make a new high here, look at it as two measured legs back to the EMA, and so that's another reason I like that one. And it's been a long time since you got a setup with 9 ticks. I mean, that's about as good as it gets lately. So you do get a higher low here, but it's way too late. Now you've had your break, 2 legs up to a new high. I just think I think you have to sit these out. And of course, you run down, you get a first entry. There's technically a second entry right there. So you could have entered right there on that, but I really treated this as a failure right here because this looks like all one move down. But if you entered right there, um, you would have to wait because it's an inside, or I'm sorry, not an inside bar, because it's an engulfing bar. You're pretty much better off to wait till this closes to enter because it's not below the EMA at that point. And that's the other reason I really don't like entering there because you're having to enter into the EMA. Of course, if you entered on the engulfing bar, it's way down here. But if you wait for this bar to close, which you just about have to trade this as the failure, you can't take it because it doesn't price. Of course, you could still call this the failure either way. So technically, that's why I like this bar. You have to wait for this one to close. And even though it broke lower there, you still need to wait on a break below this one. So you would go here. And so that's the way how I marked this the way I did. It still looks like 2 legs down with a failure right there. So I just don't think you're safe entering on this engulfing bar with it starting above the EMA. You got to wait till it closes below the EMA, and then this would be the trigger. So I hope that makes sense. Another way to look at this is this. You could almost call this where the downtrend starts. So it still kind of looks like first entry, second entry. And so you might even consider that the failure right there. And so there's just a couple of different ways to look at that. It's even though the downtrend really starts here, this is not quite a double top. It's close. It's real close. So you know, you just want to kind of go with what the price action looks like. And this almost really looks like a leg down. So you're really kind of pushing it here. So it's aggressive, and I marked it green for that reason. But you see it was a great entry. And price is the bottom drop side of it. Of course, we just go down here and we bounce. As soon as we bounce there, draw that trend line, because a lot of times when you get these fast moves up, they'll flatten out if it's going to be a range day. So that'd be something to watch, and especially when you bounce off of it instantly, but you don't really get a setup here. You get a failure. It's underneath the EMA. There is room back there, but that's the first. Actually, you've already broken this and traded down, but that looks a little sideways. There is resistance right there. The EMA is not far away. I just think it's too risky. And then, of course, again, that's real close to be a double bottom, so you might even look at that as the failure right there after you push through. It's a possibility. Again, I'm just not crazy about it. You could mark it. It's not much difference than what I showed you up here. Same kind of premise. It's very advanced. But you just don't really get a good move up on this one. You see we get several bounces off the EMA. And you might look at this as a double bottom and then a first entry, second entry. And if you did, you could take that one. I think you're really pressing it right there to do that. But that is a nice reversal bar. And again, it does look like 2 legs back too. So there's some argument for that trade as well if you want to be real aggressive. And then you run down, you get a first entry and you get a second entry. And again, this breaks higher first, so I'd wait for this to close. And so I like going short right there. I really thought we would work towards a second leg down with the idea that if it bounces here, then maybe you get a nice entry to ride it higher. And notice you do get a close outside the new low on these 2 legs down. There's basically 2 measured legs. So that you really could almost look at that on a higher picture as being a second entry. If you went to that 3,000 tick chart, it might be a second entry. Let's just look at that real quick. And here it is. And notice you get a leg down, a correction, second leg down. It doesn't actually break higher here, I do not believe. Let's zoom in a little more. But it's clearly 2 legs down. And I mean, I wouldn't have any problem calling out a second entry. It's a hidden second entry, but it's there right off the key entry point. So interesting. I really thought you'd probably see a break higher, but you don't get one. So, but here we are back, and I like that trade with a nice bullish bar. Um, we run on up. You just don't get another chance to. I mean, that's the way this thing is. If it just takes off, and if you don't get an entry, there's not really a second chance or a high or low or a failure that sets up. You just don't get much chance to enter it. I mean, there is a failure right there, and the reason it probably doesn't come back to the EMA is because you got this real tight, strong trend, and it can't get below that trend channel line or that trend line. So, I mean, the only way that would be the only way to get in that trade. You run it up, you get a first entry, and you move up, and you get a second entry. Same premise, it's just not coming back to the EMA. And most of the time, if it doesn't come back to the EMA, you don't want to fool with it. But this is a really strong move right here. And we're working on a possible second leg up. And early on, it did not look like we were going to meet that. You can see we had the first leg up, and then we corrected to here. And guess where we went to today? Right up there. And when we got up there, we kind of started going sideways. So it was a great target, but you wouldn't have thought we were, early on, I thought, well, it's going to have to be a real slow, methodical trend, which it was. That's how we got there. But it almost looks impossible. That's why I always say, draw these things and stick to them until there's no reason not to. As long as we're trending higher, that should be your target. We run it up and we just start working sideways. There is a second entry here. I didn't mark it. It's real congested right there, and you've already got your break and a new high and then a lower high. So this really, when it bounces here, this looks like sideways stuff. And notice that you got your resistance right into the EMA there. I don't think you want to take that trade. I don't know if it broke higher or lower here first. I'll be honest with you. I'm not sure. So if you did take it and it turned and broke lower, if you don't follow the engulfing bar rule of moving your stop to one tick down here and then moving it up, then you got stopped out on a perfectly good trade. And that's the problem with those engulfing bars. They can get you. And so if you play one, you just about have to go to the previous swing low and use that and wait for this bar to close and then move it over and let that be your, excuse me there if there was some crackling. I accidentally hit my microphone there, but so I don't know. I'd probably skip that trade. Then you're working back down. Again, you don't get any rejection here off the lows, and you actually fail out the low side. You come back, you get a higher low here, which comes back and tests the breakout area, but the signal bar is not good enough. It's kind of neutral. Then you're just chopping along. There's nothing in there I really like, and I don't think you want to go short yet. And finally, you get a triple test. Notice you get a 1, 2, 3 triple test, and it breaks higher and takes off. And I like that trade a lot, just simply because you get that triple test. And that's what the smart traders were probably waiting on. They were waiting on proof that this was going to hold as support, triple test, and then look at it go. And then this is a repeat pattern. Notice you got that little, but that really looks too much like congestion in one leg back. So I did not mark it. There is a higher low right here, but it's too neutral. You get a reversal here again, but now you've had a break and a new high, and it's probably going to trap shorts, but way up here, I'm just real leery of. We could be headed to this high though. So it's another one you could argue for. Maybe you could argue for that to be an aggressive entry and take it, but I'm not crazy about it. So you got your break, 2 legs up, and then boom, the bottom falls out. And there's no trade here to enter that, no trade here to enter it, and suddenly you got 2 legs down, and then you got a 2-legged correction. Even here, you get a nice second entry, but the signal bar is not very good. So, I'm not going to risk that. And you see, it looks like it was going to hold and maybe stop you out, but it runs down, makes the new low, bounces off the key entry point, So maybe you take that as a triple test. You can clearly see there's a triple test across here. Make the low, you test it once, twice, and you get that failed break, which might trap people, and it is at the key entry point, so that's a reason to take that one. But personally, you almost should wait on the second entry long or a higher low, and you get that right here. This is a higher low that, again, the trend line holds, and it's a second entry as well. So, and you got plenty of room back to the EMA just in case it turns down there. So that's a great trade. And just because it's at the key entry point, it takes off again. And of course, it gets up here and you get a triple test. And again, I don't think you want to go short yet, though. There's not enough evidence here. If we came back and got another setup here, maybe you take the short. But as long as this trend line's in play, I'd be real leery about going short up here, even though it works and works great. Now, there is a reversal here. You might have taken that one. Notice the new high, and then you get a first entry and then a second entry. But it really just looks like a double top, and then there's one leg down. So, but that's all the more reason you might say, hey, we're probably going to get another leg. But it's not. It doesn't really set up like a reversal pattern. And it's not really time for a reversal yet. So it is off the midline, and there is a triple test there. So there's a chance we're going lower, but I'm just not willing to risk it. That's another one, though. You could argue, hey, maybe if you want to be aggressive, you take that trade. And then it just bounces right off the key entry point. And you could call that a second entry, but that signal bar is a little iffy. It looks too much like a congestion bar, an indecision bar. So I think you need to wait like you did here on a higher low, and you just don't get it. Runs straight back up and turns down again, and then you get two more legs down. So again, you got a second entry long right here. Again, I did not mark it. It's a first break. It's a long way away from the EMA. Maybe you take that trade, but again, you're probably better off to wait on the higher low. And because there's no break there is a little bit of an overshoot here, but that's not clear. And there's no break of this trend working down. So I'm very hesitant. There is enough room back to the trend line to maybe take that. So it's another one you could argue, hey, maybe if you want to be aggressive, you take that trade. But you can, and then you get another little trap right here, but it just looks too congested. We are a long way away from the EMA, but we don't have a break there. It could break high. It could break higher right there and give you a close outside and turn straight down. So, and you can see that's exactly what happened, but it went enough to give you the scalp, but you don't know that in advance, and then it turns straight down. So, and that's tempting right there. But it's just a first entry. It's a very bearish bar. I think you got in an uptrend. I think you got to wait on the second entry short before you could go short there. And you get that right here. But now you've already had a break and a new low, and this could happen to you. So I don't know if there's enough room. I don't even think there's enough room to scalp out there. If you took that, you probably got burned. Now there's 2 points there, so it would have worked, but I'm not crazy about that. It's another one of those engulfing bars, and you got to wait for it to close. And I mean, it's 20 ticks, and this is the first break of a trend line, so this thing's going to reverse at some point. The key is, where is it going to reverse? So I think you need a second entry short, which comes here, but now you're above the EMA. You could see it closing above it. Again, it would have worked, but I'm thinking wait on the reversal here, and you do get that. It takes off. If you didn't enter on the reversal, I wouldn't enter here when it went sideways, and it gives you another little trap, but it's another engulfing bar and then another inside bar. Don't enter on that. Even though it works, it's not worth the risk. So we run on up. We get your first break. We try to go higher. You get another leg down. And here we are bouncing at that support again. And you get a decent bar there, but it doesn't break higher. And you can see it's just kind of working sideways, no rejection. But you run up. There's actually a little tick lower, but that looks like a first entry, second entry. I did mark this green because it's not perfect, because technically by the count the second entry's here and it doesn't set up properly. But this looks like a reversal up out of there. So you may take that trade. You can clearly see two legs up. And again, I wonder if you went to the 3,000 tick chart, would you see an actual reversal? Let's just go look. And here we are on the 3,000 tick, and first entry, second entry, perfect setup there on the failed second entry. That's what you want it to look like. So yeah, there it is. But here we are back at the 2,000 tick. There was that trade. And it just keeps going higher. We get another strong trend back up. You find a little resistance here, but don't try shorting that. Wait till it plays out. And of course, you get a break and a new high, and you never get a lower high. You get this sideways little channel here, or congestion range or whatever. You get a failed breakout, but you can't go short right there into those lows. Just wait, especially in an uptrend. And you end up it creates a trap and goes higher. I don't think you can go long there either though. So, and well, actually that's after 2 o'clock. Oh, that's after 2 o'clock. This takes us in, or 2:30. I'm sorry. This takes us in 2:30, and you never really get another setup. So, really our day ended right here because you can't trade that, and it goes on in 2:30. So there it is. Not a lot of trades, but man, there's several of them that get really big runners here. That would have given you a nice runner. This would have given you a nice runner. That would have given you a nice runner. This would have. This one probably would have. Just about every one of these trades would have given you a nice runner. And the runners will really change your math. I mean, if you're right at being profitable and you can't quite get there and you're not using runners, then that's probably what's holding you back. Because if you can get a runner, a single runner can, let's just assume you're scalping singles, and if you're going to get a runner, you couldn't be scalping singles. So, and generally, I don't recommend you use runners until you can have more scalps than you do runners. So you need to trade at least 3 with scalping out 2 and using 1 for a runner. But let's just say you're scalping 3 and you're using 1 runner, or even 2 and using 1 runner. However you want to do it, you're just using 1 runner. But if you get one of these easy runs right here, and we'll just look at a couple of them like that. That's a 30-point run. It doesn't look like much, but it's a 30-point run. Here's the other one. You get, if you catch that, that's a 40-point run almost. So even if you catch one of these that looks smaller here, like from here to here, that's 25 points. There's one here. Oops. It's 20 points basically. Of course, you won't get all of it, but you can get a good chunk of that. So if you could just get 10 points, that's 10 scalps basically on a single. So you just made up, you could have, if you're trading doubles, you could have, and let's just say you got a 2-point stop and you're trading doubles. Well, then you just saved yourself how many losses? I'm just trying to give you some examples of how it really changes your math. So if you catch 1 or 2 of those, you get 20 or 30 points in runners in a day. I mean, that makes up for a lot of losing scalps. And so that's the idea. I mean, the runners can change your math is the point I'm trying to make. So hopefully I didn't confuse anybody there. But that's the idea of those runners. And you're not going to get, if that's a 30-point runner, you're not going to get 30 points. But on these kind of runs, it's pretty easy to get a good bit of that. If you just wait to the first bar that closes outside, which is here, and put your stop 1 tick below it, well, let's say you entered right 1 tick above that, and so you're Actually, if you entered there, you might have gotten stopped out right here. So that's the first bar. And so there's your 7 points basically. But let's say you held on for this spike and channel here and the first one that closed outside. There's your, that's basically a $900. And some of these are even bigger than that. Much bigger. We've had some just crazy runners lately. And that's one of the things about the volatility. If you get it right, it's pretty easy to get a scalp, and it's easier to get runners. But on the flip side, if you are wrong and your read's incorrect, you can take some pretty good stops on some of these larger bars. They've been a little more reasonable today, though, but there's still some large bars. And if so it's a double-edged sword. You need to, if you're a really good chart reader, the volatility is good for you. If you're a so-so chart reader, you're probably getting more winners, but the one loser probably hurts you a lot more because the signal bars are bigger. But anyway, there it is for today. 2 measured legs up. Looks like a reversal day. We'll have to see if we get any follow through or not. But fairly positive day, and we needed something positive to happen in the markets. So there it is. Anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next.